Okay, good afternoon, everybody. Today is Friday, the 7th day of January 2011, and I believe we are live here. So let's take a look at this S&P 500. What I've got up here right now is a year-to-date chart, which of course is only 5 days. I pointed that out in the earlier posting today that, yesterday on the end-of-day Alpha Trends posting, I had put a chart that showed the 4-day volume weighted average price, because of course the market had been open for 4 days at that point through yesterday, and that is this this line right here, this moving average. So that had held as support yesterday, and I noted today when it broke below it that for short-term psychology, the beginning of the year, the market tends to be really kind of an emotional period of time. If you think about how you came into this new year, or I can say, how I came into this new year is probably very similar to the way that most or a lot of you came into this new year as well, which was you decided, you looked at last year's results and you said, I'm going to play a stronger defense, I'm going to hold winners longer, I'm going to cut losers quicker, whatever it might be. I'm not going to let my account go negative. I'm going to try to be positive every day, week, month, whatever your individual goals are. And because of that, people are kind of extra alert and maybe a little bit more jittery, I think. This is kind of my thinking at the beginning of the year. So when the market broke that level, to me, it indicated that, hey, maybe the bears are going to press this thing a little bit. Well, the market did get down to and just slightly through the lows that we had seen earlier in the week, and there was a nice opportunity for short-term, for day trades below that level. It made sense. First, we came down to that daily S2, undercut that, and then the market impressively turned higher. So this continues to be a market that, as we've been talking about, is extended to the upside, but it has been moving forward in a stair-step fashion with higher highs and higher lows, prior levels of resistance becoming support. And late last year we had seen the market kind of turn sideways a little bit in here, but we were holding support, and that's the key. We get some intraday sell-offs, and you look when you get those intraday sell-offs, you look at what stocks you're holding. Is it time to lighten up on some of the stocks that you have, or to take a short-term hedge or something like that? Today it was kind of fun. The first time I've ever traded the weekly options, but I got involved in some of these SPY puts, which of course expired worthless. These were the January 27th, and when the market broke down, we saw that these SPY puts went from about 20 cents up to 90 cents, and of course, you have to trade them, and they're not meant for everyone. But I mean, this is a 1-minute chart of these SPY puts intraday, and probably not appropriate to trade for most people. You really have to be on top of your risk. But there is opportunity there for either hedging your account or for some short-term speculation that you can make some good moves. So let's just take a step backwards and take a look again at the bigger trend, which is an uptrend. And that was really the point there as well, that we're in a longer term uptrend. I've still got this line drawn from some prior time, and I'm going to kind of just change the scaling here and cut out a large part of what we've previously seen, just so we can get a better picture of what we're up against and what we have the potential for. We remain in an uptrend. That is the key. That will remain the key, and it takes a while for the market to distribute and then to turn lower. And even if we do drop, what are the levels where this market would likely find bigger support? Well, we've got these bigger prior levels of resistance, of course, in 125-ish area, but the market remains in an uptrend. We've got an advancing 5-day moving average. We broke below it slightly today, and on this time frame you can see that we also kind of touched a trend line in there as well. Let's back that up to the 30-minute time frame, and here was of course a bigger level that I was looking at, but here's that trend line that remains intact as well, which is close to the 10-day moving average. So again, the pattern is higher highs and higher lows. Nothing wrong with taking speculative trades in the opposite direction, but resistance right here from late last year has become support twice. Now, obviously, the more time support is tested, I like to say the more likely it is to fail. But if it continues to bounce from there, maybe we're just sucking short sellers in. So, here's our range year to date. Obviously, if we break down below this 126. Let's just call it 126.15 next week, then you've got to look at that and say, well, maybe this market is due for a bigger correction, and then you start to look at downward objectives at a 20-day moving average, prior support levels, that had become resistance and that sort of thing. But right now, the key message is the market does hold up. There's intraday opportunity on these breaks, but it's probably not appropriate for most people to be that aggressive and trade the short side like that, because again, it's against the primary trend. The primary trend is higher. I like to say when we have a misalignment of trends, that you're better off either sidelines in cash or trading something else. It's rare for most people to be day traders. Most people are a little bit longer term looking than that, and that's totally the way it should be. Is that you have to understand what works best for you. Maybe it is day trading. That's fine too, obviously. The NASDAQ closed down a nickel today, and in a longer term uptrend. It continues to ramp higher up through those levels from 2007 that we'd been talking about late last year at 55.07, and on that monthly time frame, when we look at that, it's hard to say where's the potential for resistance in here. Upside targets. A lot of people, and it becomes actually a little bit of a pet peeve of mine. People are looking for upside targets all the time. Our job is to manage risk, find the low risk entries and manage risk, and not get so focused on what is the potential upside. Of course, we have to have an idea of where this market has the potential to go so that we can justify whether or not it makes sense to take a trade. But this market still looks like it's going higher. It's innocent till proven guilty. That's the path of least resistance, which is higher. And as long as we maintain support levels, that's the key thing. Now, the NASDAQ obviously has been stronger than the S&P. The low that we had seen on Tuesday, we didn't come anywhere near here today, and that is approximately those 2007 highs as well. So 55 will be an important level here next week. If we break below that, then you want to become more defensive, and just above that we have maybe 55.30, today's lows. But NASDAQ came back much more impressively even than the S&P. It is above the volume weighted average price, and above every moving average on the daily time frame. It's hard to you can get bearish for short-term trades, but to stay bearish simply doesn't make sense in this environment. The Russell 2000, we've been talking about that. That's clearly the weaker market in here. It did break those lows from Tuesday briefly, but on a closing basis, it held that 20-day moving average. We're still in an uptrend. We're just turning sideways here within this uptrend. Looking at the weekly time frame, backing it up in here, let's draw a couple horizontal lines on here. Here's where we are, and here's where the bigger level of support should be if we pull back down at 75.5. 75.5 is also approximately where we see that rising 10-week moving average. So if we're to get a knee-jerk sell-off, just something, a quick little panic, 75.5 would be the bigger level. But we're in an uptrend, and we have to look at potential upside objectives as well, which would be these lows from 2007 and where the market had broken down from hard in here at about $83 a share. So Russell 2000, again, it's getting choppy in here, and we have a lower high, but until we break down decisively below this 7750-ish area, and probably even I would say this level in here, I would say probably until we break down below 77 even, this resistance which became support and still just a little bit below us. If we broke that, then maybe then we would see a deeper pullback towards the 50-day moving average. I don't think it would be an instant move down towards the 50-day moving average, but it's something to be aware of when you see stocks like Coke breaking their 20-day moving average, breaking their 50-day moving average. You see McDonald's breaking down, back in here. Some of the bigger names like that are breaking down, but at the same time, you have IBM, which is traded to an all-time high today. Yesterday, it closed at an all-time high. It's difficult to get bearish and stay bearish when we have a big name like IBM up at all-time highs. When we see a stock like even Microsoft, that now the weekly chart, obviously, we know what Microsoft has issues, but on the daily time frame yesterday, we saw a pretty good move higher past multi-month resistance here. I didn't draw that too well, so let's just go with the horizontal line because they draw them straight better than I do. But we still got maybe some room for upside in Microsoft even. So when big stocks like that, it shows that maybe there's just some healthy rotation in this market, and money's leaving certain stocks but flowing back into other ones, other big cap names that are able to maintain this upward trajectory for the market overall. So again, it remains impressive. Gold, gold, a lot of people are calling gold done. I don't think it's done. We've got some support right here that we held at this week from the December lows. Below that, the bigger level in gold is probably 128.5, and I wouldn't be surprised to see it move down towards that level. So I think you need to be defensive if you have a gold position, but the bigger uptrend is clearly still intact on the weekly time frame. But you can see that it's slowed way down up in here, and deeper pullback might be a good thing actually for the longer term trend of gold. I also said that I was going to talk about some of these other stocks. One I wanted to mention was this VTG. VTG, this is that Vantage Drilling. I've mentioned it a couple times recently that I thought this weekly chart really looks nice in here, which it still does, and I think it has the potential for a bigger move. Obviously, yesterday it had a big move. It got past that 209 level, made a new high by a penny, and today we saw it pull back on some lighter volume. It was, to me, disappointing because it did trade below and close below the 2-day volume weighted average price. I'm still long some of this stock, not as much as I was. Fortunately, the way I trade is, I like to buy strength and then sell into strength and, try to hold some. And here's one where I'm holding some, but I'm not really confident about this position in the short term. If it gets back above this 126 level, I think the stock is off to the races, and this proves to be a shakeout in here for this name. Couple other names, LNG. I mentioned this one. And I know a lot of people are bullish this stock, and rightfully so. Look at this weekly chart. It's just a fantastic looking weekly chart. It's got this big bullish volume this week and bullish candle as well. If we take a look at where we are at this $7.20 level, the high last year was $7.22, and today's high was $7.25. So we cleared that. A lot of times you see a movement through an important level, like we saw in VTG yesterday, and then a short-term pullback. But if we can maintain here next week, I'm still long some of this stock. We look at where the 8 looks pretty easy, and beyond that, who knows? Maybe there's something bigger in store for this stock. It got the shit kicked out of it in 2008. It spent a lot of time building this big base. If they don't scare you out on these drops, they typically on these. Let me get that back. On these drops, if they don't scare you out, they typically wear you out, and you get a new base of holders that are the stronger holders. And anyways, this one continues to look good. I'm sure I'm going to leave a lot of money on the table by trading the stock, and I can maybe look back at it sometime late in the year, and who knows, maybe the stock will be $15 a share. I have no clue. I'm not an investor. I'm a trader who's trying to hold some things a little bit longer term, and listening to the message of the market objectively and saying, where does the market have support and resistance and that sort of thing. We've seen a lot of little stocks moving, and that's been part of the reason that I've been saying let's just enjoy this madness of these little stocks moving, but it's a sign of caution, and that's why that's part of the reason I thought that it made sense to buy those puts today as well when the SPY broke that volume weighted average price, and it was a level of support that people were watching as well. Fortunately, they were expiration of today, so I knew I had to trade them, because otherwise maybe I would have held them a little bit longer term. But again, very impressive comeback for the market today, and some other names that look decent. The uranium move, I think, has kind of petered out a little bit, but this one stock still has my attention a little bit. This is this USU. It's still got this longer term base that it's done nothing really, but maybe this has the potential to get going. You can see the bigger volume that it traded this week, and you can see that on the daily chart as well. That maybe this stock is poised for some breakout. Bigger level, maybe 625, or so there's that 625 area. It's tough to say exactly where it breaks out. And also CELL is a similar type of stock, and it's actually also similar to a stock that I mentioned last weekend, which was this Triple R. Triple R was one that had this longer term base, and it was consolidating. And I got in it Monday, got shaken out on Tuesday, and foolish me never looked back. So, you look at this stuff, and I got shaken out in here. It held the 5-day moving average, but I kept my discipline a little too tight in this case, maybe. But another stock that looks similar to that is CELL. CELL, nice longer term base here, and breaking this. Let's do the horizontal line again. Breaking this bigger level, it looks like Cell could make a break for 10.5 or so. Nice percentage move in a stock that's plenty liquid, trades a little less than 500,000 shares a day. I didn't realize. I actually thought it was more liquid than that. But anyways, that's I don't see anything as far as requests on Twitter. So I have a headache today. I'm going to shut this thing down before anyone types anything into Twitter. Hope everyone has a good weekend and had a good start to the year. Make sure that you maintain your discipline that you might have started out the year with. Don't let it fade. Make it new week resolutions, week 2 resolutions, monthly resolutions, whatever it is that you have to do to keep you on track. Keep doing that, and hopefully this turns out to be a great year for you. Thanks.